Guys, there's some interesting things that could happen this week, but we're also going to look at the exciting May that we just had and all the things that it says about the future. But first off, let's recap how May went, because it's a pretty strong month for stocks here. S&P up 4.8%, NASDAQ up almost 7% last month, and the useless Dow Jones Industrial Average, which is stupid, was up 2.3%. Now, I look at this thinking to myself, how does this feel, guys? It's a big month. Mo, how'd you feel in May? All my stocks went up.
All my stocks went up. Yeah, everything was green. Great, I guess.
Not much buying going on between us. We're selling a lot of puts. Some companies had some falls. But guys, it's been driven a lot by Nvidia. Nvidia was up to $1,150 per share in May.
Crazy.
Absolutely crushing it. They just announced that new chip they're going to have starting in 2026. What's that chip look like, Mo? What is it called? Rubin or something like that?
Rubin?
Something like that.
Some new chip. I saw it last night when I was laying on the couch. That was Sunday night. I was like, oh boy, here we go.
I mean, they're riding this wave of AI and
they're doing a great job riding the wave.
Phenomenal job riding that wave. The question you have to ask yourself is the market pricing in too much euphoria about Nvidia? Is Nvidia the next Cisco? Because you remember when we talk about Cisco, it's really important to understand that Cisco from 2000, here's the all-time chart for Cisco. Look at the all-time chart for Cisco. This was the Nvidia of 2000. Now, I know a lot of you probably weren't around back then really paying attention to stocks because our average viewer is 25 to 40 years old, but Cisco was considered the first trillion-dollar company when it hit $500 billion market cap right here.
How'd that go?
Look at it, guys. It's gone nowhere. And I love showing this because look how low it got. It got back down close to 10. And the reason being is you might sit there and say, well, yeah, but the revenue and profits sucked. No. Look at these financials. Let's go back. They did $57 billion in the last year in revenue, $12.6 billion in profit. And in 2000, they did between $12 and $19 billion in revenue. So they're 3 times larger, possibly 4 times, and made $2.7 billion in profit. Wow. So they've made 5 times more profit than they did back then. And the stock has gone absolutely nowhere. It's still selling. All-time high was $82 a share. It's at $46 today, almost 50% lower 24 years later. Wow. Is Nvidia going to be the same way? I don't know. And it might sit there and say like, oh, it's impossible for that to happen.
It's not a one-off example either.
It's not even a one-off example, guys. Go look at Intel. Go look at Micron for a big chunk of time. Look at AMD, all these great companies. Microsoft took 15 years from 2000 to 2015 before it created its 2000 high, even though revenue and profit were up a ton. That's the big key here. Now, earnings week, kind of a weak earnings week. Nothing majorly exciting going on.
Winding down.
Yeah, Bath and Body Works, some Ollie's, Dollar Tree. Oh, Lululemon, that's a big one.
That is a big one.
Lululemon. I'd be interested to see about ChargePoint too. Ooh, Neo. Neo's reporting.
There's a couple.
That's exciting. Okay, so maybe it's better than I thought here. A lot of retail. So guys, if you like these kind of reactions to what's going on in the market, earnings reactions, we have 4 or 5 videos a week on this channel specifically. So make sure you subscribe, follow the channels, allow your notifications. That way when these videos come out where we react, boom. Because if there's a sudden movement in the market up or down, we're going to react. We're going to sit there and say it because we like reacting to these things. But remember, we're trying to teach the process that you shouldn't make investment decisions based on short-term reactions. May was a big month because by now, back in December, everybody thought by now we'd have a couple rate cuts going on. But now they're actually projecting for a chance for a higher rate. May was announced when they did the guessing. They were sitting there saying, listen, Kashkari and a couple other Fed people came out and said, we're not taking Fed rate increases off the table.
So I have the Fed Watch tool right up here. It's a trivia question. The meeting is June 12th, okay? 9 days from today. What do you think the probability is that the rates stay the same?
98%.
99.9.
Wow.
99.9. That's crazy.
Considering
in perspective of where we were in November, December of last year.
They were literally talking in December of 6 or 7 rate cuts this year. Now there's a chance. Oh, by the way, Mo, what's the chances back in December that in December we're at the same rates we are today? So keep in mind, it'd be the same rates from December of last year. For December of this year, what are the chances? What are they showing there?
So December of 2024, that we're the same?
Yes.
10.5% chance as of right now.
And guys, that's like, oh, that's low. Yeah, it's low, but what was it probably back in December of last year? If they were expecting 6 or 7 rate cuts, I bet you the chances of December of 2024 having the same rate would have been 0.1%, if not less, which sounds insane. But that's the point, guys. We don't know what's going to happen. We don't know what's going to happen in the short run. All we can do is sit there and teach the process of understanding the fundamentals of business, buying a great company for a great price. And if the stock falls, but the fundamentals stay the same, take everybody else's emotional ride and take advantage of that. Mo?
So the first time that there's a majority that people say that we're going to get a rate cut is September. And that's only a 51.4% chance right now.
And that's based on where we are today.
Correct. At this moment in time, right now.
Guys, remember, what would cause rate cuts? The economy doing something bad, the economy faltering. That's what gets rate cuts, not booming economies. People think that, oh, we just had rate cuts. We kept inflation down. Rate increases. We kept inflation down. Go cut. Guys, the Fed isn't fully convinced that we've seen the last of inflation. They're not convinced of that. And I like the fact that Fed Chairman Powell and the others are being more hawkish on this to say, listen, inflation hurts everyone. It hurts everyone. We'd rather keep rates high. And they've been very lucky. Mm-hmm. Rates being higher. Is this the first soft landing of all? Is this the first time they've done this to slow down the economy and the economy hasn't slowed?
Yeah, it seems like it if you think back to history, recent history.
Exactly. Now you also look at where do we stand? We look at it saying, okay, we had 0% rates 2 years ago. Now we have 5.25 to 5.5. If I want 90-day Treasury, I'm getting 5.4%. You would have thought that markets would go plummeting down.
Right.
They didn't.
Nope.
They did for 1 year, and that was in 2022. They plummeted. They came roaring right back. Guys, remember, opportunity costs. If you can get 5.4% on a 90-day Treasury, what return do you need to make in order to make an equity investment? That's your cost benefit there. That's your opportunity cost. That's where I sit there and say, I look at history. I look at where we stand on the 10-year cyclically adjusted PE ratio and where we stand on our stock market GDP ratio. Both are 100% overvalued. Both of them. Not just the stock to market to GDP, but also the cyclically adjusted PE ratio. We are 100% over the long-term average. Now, could it be because things are different this time? Well, guys, I would argue that every investment's the present value of all future cash flow, no matter what time frame we're in. Now, is it easier because of service businesses to generate more and more profit as time goes on? Yeah. So does that mean we should have a little bit more of a premium? Yeah. 100% more?
That's a little much.
Might be. But we haven't seen a real bear market. Because remember, the last 15 years, our two bear markets were COVID for a month, literally for a month, but the market fell 40%, and 2022. And the markets came roaring back. Let me ask you a question. Do all your friends make money in stocks? If they do, that's probably a question to ask. Is that reasonable? When you have a guy putting a tweet out, leaning forward in his chair, and a stock goes up 100% like GME, GameStop, is that rational? I would argue against that. We got to have a weeding out process. I look at real estate. 2 years ago, we were getting just absolutely laughed at for our offers. Rates go up, all of a sudden we're in the running and we're on contract on a $20 million property, 200 units. And we've been in the running on 5 or 6 properties. We were in the final group. 2 of them, we were the highest offer. They just didn't take ours because somebody else more local, they wanted to go with a local player. Fine by me. But we kept worrying about this. Like, guys, the real estate market's it's hot for investment. What's going on here? Well, because everybody assumed 3% rates forever. Mm-hmm. Well, no. Yes, you might sit there and say, well, they weren't really assuming that. Yes, they were.
Yeah, they were.
They were, just by their offers. And I look at all these companies and saying, guys, the pendulum will swing the other way at some point, where no news is good news. Right now, all news is good news. Mm-hmm. At some point, it'll be no news is good news. And that's where we have to get back to more equilibrium in the market. Now, that would probably be the other extreme. But at some point, we have to make it harder to make money in stocks. When you have people buying Nvidia, they have no idea what it does, but it just keeps going up. You know how we feel about that. So guys, thank you very much for your time. Make sure you follow this channel because we do updates 4 or 5 times a week and it gets really exciting when stocks fall. Take care.